Okay, back to my Fate. I have a wonderful ticker for for the company, Fate Therapeutics. Before we look at the chart in detail, I just want to give you just a very quick background as to what sort of caught my eye when I was running the filters on FinViz on Fate. And the filtering system that we start with, it's really all about volume and trying to find those volume anomalies through the screener, such as FinViz, looking at average volume. What is the actual volume at the moment? Is there a disconnect between the two? Is that telling you something about the price action? And by the time I'd run the filter and also relative volume as well, I've got some other criterion that I like to use, but it basically, Fate was the one. And I looked at it and I thought, oh my goodness, that's really, really interesting. And the good thing about FinViz is you get this nice chart, you get all the metrics as well for the company, and you can have a look, you know, whatever the metric. I mean, some of them are absolutely terrible. You know, return on assets, return on earnings, return on investment. You think, oh my goodness, why would anyone put money into this kind of stock? Well, you know, there are reasons. It's a growth stock. It's biotech. Potentially, you know, it can come good. It's already come good because, as we know, when we looked at the monthly chart, this is what falls into our category of fallen angel. What you also get, you get a little bit of a background to what the analysts think about the stock. You get the news feed underneath it, which is again very interesting. But what really caught my eye was this tweet by this person called Feral Cat. And you can read it. It says, Fate was very disappointed with my investment. Don't know who this person is, how much. Kathy was dead wrong. Now, I looked it up, and it's obviously Kathy Wood. Those of you would have heard of her. She's the lady who runs the ARC ETFs. And I think I did a quick search and looked at where she actually bought in quite heavily into the stock. And I looked at the point at which she bought in. I thought, well, you know, she must, you know, good luck to her. But clearly, you know, this person has been disappointed, because when we go back to the chart, the monthly chart, we can see it's a fallen eight. It's a classic pump and dump. We have a very, very long period of congestion, consolidation. As you know, there is volume going in, but the price isn't going very far. While it's in consolidation, it's building up these strong levels of resistance, of support. These are these thick hatched lines that we have here. You end up with this sort of corridor, this channel of price action. And this particular indicator that we have developed, this is the NinjaTrader platform. This is what we've actually called the accumulation and distribution indicator. And every time one of these levels is touched and it holds, the price, the line becomes thicker and thicker. So it gives you a visual representation of how strong that support or resistance is. Now, while that's been building at the same time, the volume point of control, this is volume-based support and resistance. This is volume and price over time. So there it is. This is 16. This is 2016. It's going absolutely nowhere. If we look at the amount of volume that's going in, yeah, it's a reasonable. It's simply in this very, very long period of consolidation. Now, this is what typically happens either with stocks that have, you know, fallen dramatically. They will then go into this accumulation. They fall out of favor. They, you know, they don't suit the economic conditions anymore. There's bad management. They, you know, they just sort of, you know, they just tick along. And, you know, maybe, you know, the economy changes. They're in a sector that is now going to be, you know, that people are going to be investing in, and, you know, the accumulation, then they start to break away from the accumulation. As I said, this is the buy. Now, biotech as a sector is particularly volatile. It has a lot of stocks that don't make money. They are, they're very speculative stocks. This is a very speculative stocks. It's a very risky sector, if you like, but they can come good and they can produce some very spectacular returns. And what happens is, as we can see here, you have this period of consolidation. We know it's beginning to not gain traction so much, but stabilize, because we can see the price action, very close to the volume point of control. It manages to hold through the resistance and the volume, because the volume point of control, these levels that are developed by the VPOC, by the accumulation and distribution, once the price takes off, become a very, very strong platform. And if we look right over here, we're jumping ahead. What happens is, when it comes to retest it, because it's such a strong platform, because of the price action that happened over here, it can give you, it's people, investors, funds, etc. They see that and they think, that potentially could be a good place. Maybe the stock is now going to come good again. And what also caught my eye is, if you add the volume under those two bars, you have 37 million under here, and you've got, I think it's 36 million under here. But it's the two highest volume bars on this particular chart. So it's almost as if this level here, at this point here, which was actually the liftoff for, if you like, the pump high. And I say pump, and I say it, and it's partly derogatory in the sense that there was a genuine, there is a genuine move. It's not, if you forget all this for the time being, and you look at the accumulation and you look at the price action, we see the first break on these three candles, and what happens is the volume is falling. Now we know with VPA, price rise, volume falling, hey, that's probably, not going to go very far, and it doesn't. And I've highlighted this candle because I think this is a really important candle in this break higher. The price does fall, we can see here. Now it doesn't end, you do end up with a wick to the bottom of the candle, which is very, very significant. You have a fall, you have a test again of this very important support platform made up of the volume point of control and the accumulation distribution indicator. But look at the volume that's gone underneath it. That gives you confidence. Yes, we had rising prices, falling volume, but we know what's going to happen. Back to the volume, and we know that's a strong point. This is what we actually want to see. This is the kind of anomaly that we want to see to give us the confidence, yes, this price is actually going to go higher. And it does go higher, and it carries on. Now, the next in the journey higher, you've got another one here. You've got a little wick to the bottom of that candle, very high volume. It is anomalous in the sense that with that much volume, you would expect the range of the candle to be high, but because it's got a wick to the bottom, the price is being supported. Now the next candle, you say, oh, it reverses again, but look at the volume. There isn't any volume underneath it. Again, that's what we want to see, and it's it's a nice, comfortable price action higher. The volume is in agreement. We're we're seeing a pullback, but there's no serious selling there. That's fine. If you carry on, you get a nice lot of volume, and then we have a kind of repeat that we have here, where we have three candles. You've got a wick to the bottom, but we have the volume falling again, and again it just puts us on notice. We also have a wick to the top of that candle. Now that is classic VPA, and you think, yeah, that's fine, that's what, maybe that's going to fall. But then what happens is you have the reverse happens. You have a ton of volume going in. We do have a volatility under this candle, but it is sort of anomalous given the range of this candle with the kind of volume that's underneath it. It's a little bit thinking, oh, okay, well, okay, fine. If you're trading and you see that, or you're on the faster time frames, you know, and it's moving, fine. But if you know you're looking maybe for something longer term, you think, yeah, okay, fine. No, I'm just accept what you see on the chart. Sorry, though this is the candle under here. This is the anomaly. You've got a wideish candle, and you've got falling volume. That's what I was. That's the volume under there. That gives you pause for thought. Then what happens is you have this massive candle with this volume under here, and that really is, and it's at this point, this is where I think the pump comes in, because people who traders and investors who've been watching this and maybe have seen this quite gentle move higher suddenly see this massive candle come in. The price sort of runs away with it. You know, I don't know why, maybe a piece of news, who knows. The volume underneath it is fine, but it's not much more than this one, and it's okay, a little bit more than this one, but look at the spread of this candle, and it's also got a wick to the top of the candle. And in all seriousness, if you're going to see that, then that is really, really suspicious. Now, what happens then is you then have these huge candles, not a lot of volume underneath, and you can, this is over a month, and you can imagine what these candles do is they suck traders and investors in, because, as David said, on FOMO. You've seen this ramping up. It touches a high of $121. This is $16 here. No, not in a fairly short space of time, and it's up here that so many traders do get trapped. We've got volatility, we've got wicks to the tops of the candle, which are fine if you're trading this on a daily basis or over a short period of time. You just take advantage of the price action. But as an investor, and you start getting in up here, and then the candles start doing this, where you've got these wicks, you've got volatility. What are you going to do? Most of the time you're going to sit there and think, well, it's already got to 120, maybe it will carry on higher. Yeah, I'm going to sit here because I've been told, buy and hold, that's what I'm going to do. And it carries on for quite a time. It kind of falls, but there's enough in there. It's at 90, then at 80, then at 70. Well, okay, I may have got in here, but it's looking good. Maybe you read, investors read that this is don't worry, hold on, this is going to go higher. This is just hold on there. It's just having it's settling down, as it were. But it's when you get to the low of this volatility candle, and that's when it starts to fall, and it starts to fall quite dramatically, as I said. And you then fall from $60, and you really go back all the way back down to the volume point of control. And this is what I was trying to say. With these type of price moves in this sort of formation, as I said, a pump and then a dump. As I said, I'm looking at the monthly, but this happens on the faster time frames as well. There is, I've no statistics. This is purely, observational. When it gets back to this significant level, and I've got another example with Southwestern Energy, it seems to attract, if you like, the interest again. And I actually have said in my post, I said it's been attracting a great deal of interest, and we only have to look at the volume histogram. That is a heck of a lot of volume that's going in, and it's occurred at this particular point in the chart. And it's just one that I'm going to keep an eye on, see what happens, see how the price action develops from this point here on in, having had this journey here. Now, what then tends to happen is, with this volume, being pumped into this stock, if it starts to move higher, what will happen is, all up here, there will be what I call bag holders. They will be the traders, the investors who have held on. But as soon as the price maybe hits the level that they originally got in at, they will say, you know, I'm just so grateful to get out at break even. That's it. I'm out, as it were. So although that's a positive sign, it's what happens next. And this is where you have to think about the psychology that was going on at the time, when, you know, buyers were, were buying. And you will also get buyers, you know, who think, yeah, this is, you know, it got to 120, 121. Oh, it's cheap now. It's cheap at $50. You know, it's a great buy. And then the price drops even further. It's knowing when to actually step in. And these two candles are a great example, because you have this compression of price, you have these significant support and resistance, you have the support platform that was built over here, and you have massive volume underneath it. Yes, it's anomalous, but it's anomalous, if you like, in the right way. It's the right kind of anomaly. Not all anomalies are bad. I know sometimes we talk about an anomaly and we think, oh, all anomaly, you know, are bad. A hammer candle is an anomaly, but it's one that you want to see. Now, this is obviously this is a hammer candle that is forming this month. Now we have to wait to see what happens. Is that actually going to, you know, is there going to be a follow through on there? But you have to also factor in that if I get the crosshair here, for example, I don't know, say maybe someone bought here, who knows? I mean, this one, this is a weak candle. This is another weak candle that we have here, although we do have a tail to the bottom of this candle. This line here is actually a trend line that is from the daily chart, and this is what I've also found, that if you do a really nice trend line on a daily, it will obviously be on the slower time frames. And it's quite interesting how it was actually respected in the price action of the monthly chart. So we've got the volume, we've got the support and resistance elements, and now, you know, now it's the trend line itself. Let's see what happens on the trend line. And I think today, let's have a look on the daily chart. It was this one. Yeah, this was really nice. We've had this sort of break. This was a huge amount of volume that came in. It's got through the volume point of control. You can see it's built its own platform on the daily chart, and this was also very encouraging. These are the two down candles, but look, the volume is falling away underneath it, which is what we want to see. So we're having a pullback. Where's it pulled back to? It's pulled back to $24. So, but as I said, bear in mind that, you know, there will be a lot of bag holders going, you know, if it is going to go higher, who will be so relieved to be able to get out of this trade. Now, a similar example, which I haven't actually got on my Ninja Trader, I have got on, where's it gone? I've actually put it on Market Beat. I don't know, for some reason, SWN on my Ninja Trader doesn't look anything like this. The other site that I like to use is Market Beat. I haven't actually paid for Market Beat yet, but I do pay for Finvis. It stops all the ads, but I will be signing up to Market Beat. And this is again talking about volume, and really the one that caught my eye is here. This is so out of, you know, you can see here there's a ton of volume has come in. But the interesting thing with this chart is we didn't have a pump and dump. We simply had we had a move higher. We had almost like a distribution up here. There wasn't a lot of volatility. We simply had some sideways price action. It couldn't get beyond, was it $9.54? And we've had a sort of a kind of waterfall here. And where's it gone back down to? It's gone back to where it lifted off, which also coincides, it's become a support platform for, this was the high of the chart over here back in March, where we've got this shooting star candle. So I've linked up these important points on this chart. We've had a ton of volume go under here. This is an anomaly in the sense that it's not pushed it. It hasn't managed to follow through so far. We've actually had a pullback. Where's it going to pull back to? Well, if it's going to pull back all the way, it'll pull back here. That's what often happens with support and resistance. You know, you may have to get more than one touch or two touches, but if they hold and it's been preceded by some decent volume, that should be, you know, that can be positive, as it were, and particularly if it coincides with, as I said, these regions that we see over here. And in fact, I think I can put it, I put it back on here, SWN, Southwestern. You can see it a little bit better here. Yeah, and in fact, they've actually drawn the trend line under this point here. This is where they've also got a this trend line here. So it's back at the trend line. And the nice thing about FinViz, you can actually see that volume under there is 151 million, as I said, and there was a trend line up here. So we can see why there was, we would call that a distribution. It couldn't get any higher. Volume was neither here nor there really, but this is, it's anomalous, but you know, hopefully it will be a good anomaly. And again, just a very interesting chart to look from that perspective. Terrible metrics, as we can see. Return on investment is good, but the return on equity, return on assets, absolutely dreadful. The volume that's coming, the average volume is 38 million. I mean, it's massive. Obviously, this is an energy stock. The energy sector has been very strong. It's had a bit of a pullback recently, but it's been very strong. And Southwestern has been one of the ones that has benefited. And then I just like to flick through. I don't, you know, oh, here we are. This is my second worst stock. And you know, I sometimes do feel it gives me a sense of, you know, what traders are thinking. So 2 weeks of gains erased in one day. That's I don't know. It's just, I just find it interesting. I don't pay too much attention, but it's interesting to see what you know, what the conversation is around the stock that I'm looking at, and also it gives me an insight of where I think, oh, he must have got in here. Why would he have got in there? As I said, the previous one on Fate, I think it was probably based on, you know, well, Kathy was buying. Great, you know, good luck to her. She's done, you know, she's done well in some things. One of her ETFs is not doing so well, but you know, if everything turns around, it will get, you know, those she does have, you know, invested in very speculative growth stocks. You know, maybe their time will come. With that one, you have to be very patient. So that's what I wanted to say about these two stocks. David, can I pull back to you? If you've got any questions on anything I said, please just drop them into the chat box. As I said, I will be doing a write-up for Fate. Some people like to read analysis, some people like to listen to analysis. It depends how you like to absorb information, but I find that if I write about them, it also helps me to you know, to crystallize what I actually want to say. And in fact, with regard to VPA, just as a little tip, you know, look at a chart, put your support and resistance on, put your trend lines if you want to, if you've got our quantum indicators, and write it down. You know, look at it and say, you know, because actually writing it down, it helps to clarify it in your head. And if you can explain it to someone else, then you've understood it. And look at the charts and say, oh, why did that happen there? You know, is there a reason for that? And it just, as I said, it's just a great way to learn. And because then when you're then looking at a live chart, that will all come back to you, you know, come back into your head. So I'll pass you back to David.
Hopefully you can hear me. Hopefully you can see my screen. Just, yep, good stuff. Okay. Just drop the chat box out of the way. I've gone over onto the indices. I've got the YM, the NQ, and the ES here. And I have to say, there's not a lot going on. Yesterday was a great trading day. Tomorrow will be a great trading day. Today is not a great intraday trading day. You can see this is on the daily at the bottom. This is on the YM, very narrow on the NQ, very narrow on the ES. And I'm just looking across onto Trading View, just looking at what the VIX is up to. It is kind of falling away, but not falling away very rapidly. It's just kind of sliding lower, trying to give the indices a little bit of a lift. But as you can see at the top here on the 5-minute, we're trading around the volume point of control. It's very evident on all three of them. So there really is very little going on at the moment until they break away, certainly from a technical perspective, until they break away from the volume point of control on decent volume. But as we're now 25 minutes past 8 here, so we're coming towards the end of the session anyway. So unless something surprising comes along in the way of news, there isn't going to be a huge amount of activity, certainly from an index trading perspective at any rate. That's not to say there aren't opportunities elsewhere. Just one thing before I go over onto the stocks. So I've got Apple over there. I just want to pull up Market Analyzer because some of you may not have seen this. You may or may not be aware we are doing a lot of work on NinjaTrader at the moment. It partially in preparation for the launch of the stock trading program, because we are developing 3 or 4 new volume-related indicators, particularly for trading stocks, both intraday and also from an investment perspective. So they are being developed on NinjaTrader, and then of course we will migrate those across to all the other platforms in due course. And if you've got the full package, you'll get them free of charge. But one of the areas that we wanted to work on in Ninja, because it's been something that we've had on the back burner for some time, was obviously this, which is Market Analyzer. So what we've actually done is to give you the option to add a lot of the indicators which are valid to Market Analyzer. I've got the volatility here, I've got Camarilla, I've got the volume point of control, and I've got trend monitor over here on the right hand side. And you can have as many of these as you like, and you can set them up accordingly with colors and all the rest of it. So it just gives you a very visual perspective on what is going on. There was a lot of red. This is on the 5-minute time frame. This complete workspace. This is on 5-minute time frame. There was a lot of red earlier on. You can see it's starting to diminish. The whole of this was red about 10-15 minutes ago. Starting to get a little bit of some movement, some uptrends starting to develop. Over on the Camarilla, you're starting to see a lot of signals here in terms of breakouts, in terms of possible reversals, etc., etc. So it's just a really quick visual way. I've only got 30 on here, but you can have hundreds on the analyzer, and say you can set them up in several different ways. This is just a very basic one that I've set up just to show you what it's like. But over time, we will develop more sophisticated ones, and I think probably add them as part of the package. At any rate, if you've got the full package of NinjaTrader anyway, you will be getting all these indicators free of charge in due course. But I just wanted to show you that for those 30-odd stocks that are on there. Let's just head over onto the stocks. So I had Apple on here early on. There was a really nice move lower on Apple. Where are we? This is on 3 minutes, very fast time frames, but intraday, so what? If you're a day trader, that's what you're looking for. Nice move higher. Now we've had a nice move lower and bottoming out now, starting to find some traction. But just head over onto the 3-minute here. And, this is the beauty of multiple time frames, whatever they may be, whatever market you are applying them to. We get up to we move away from the volume point of control, we start to move higher, we get a little bit of weakness on this one, then we get higher volume here, and yet the candle is more compressed, and we've got a deep wick to the upper body. This is just signifying that there is some weakness coming in here. Then we get a further sign of weakness, another effort to rally. You get a pivot to the top side. Not a lot of volume under that, but the the price action is symptomatic of weakness. If you see those sorts of candles, you know, it's symptomatic of weakness. Then what do we get? We move sideways, not much you can infer from here. Then we get, you know, yet another signal of weakness. Market tries to rally, falls back. Next one, market tries to rally, falls back. Indecision. Then we start to decline, which is what we're really expecting to see after this sort of cluster effect. Then we get a final, if you like, effort to rally. It's almost like the sort of last hurrah, if you like, of I'm just gonna try again, you know, sell it. This is the market makers selling into weakness, and you know there really is no interest to the upside, and then off down we go into the price waterfall and back down to the volume point of control. Now, in terms of, you know, a trading opportunity, when you're up here as an intraday trader, you're up at 139.80, 139.70. The question, of course, is, and in addition to that, you've also got this very strong level of what was obviously acting as resistance at this point, resistance at that point, and then becomes resistance again here to the upside. So you've got through it here, and then you've gone back through it here again. So now it's becoming, you know, it's capping any reversal. It's a really strong level, and it's a really strong level here. So once you start breaking down to the downside, you know, it's a protective layer above you, if you like, and just combined with that, it will give you more confidence perhaps to enter the trade at that point, because not only have you seen all this as a precursor, but you've now also got some upside protection on the accumulation distribution indicator. And this is a strong level. How do we know it's a strong level? Because it's a relatively thick line. We know it's been tested multiple times, and therefore it's a strong level. Once we break through there, you know, it's giving us some confidence to short. The question at that point then, if you're shorting at 139.70, is, well, how much opportunity have I got in this trade? And really, with the volume point of control down here at 139.20, you know, is 50 cents enough for you? Now, if you're trading big size, you're trading, you know, hundreds of shares, then fine, that may well be enough for you. If you're only trading a few, it may not be, because sure as eggs are eggs, that whatever will happen, you can be pretty sure that when the price gets down to the volume point of control, it is going to congest, because that's what the volume point of control is all about. It's about where you are going to see congestion build, if you're above it or below it, moving towards it. And in addition to that, it's also about giving you this whole volume histogram of volume, where it is the stronger levels, the more congestion levels, the lower levels, the low volume nodes and the high volume nodes. Because once you start to approach something like this region here, you do not expect the price to congest at that region, because it is a relatively low volume area, and therefore you expect the price to move through there fairly quickly. You can argue that in one of two ways. First of all, you can say, well, it's because we've got a lack of volume in that region, which acts as congestion in exactly the same way, or support in exactly the same way as price-based support and congestion does. This level here is based on price. This level here is based on volume. But in terms of how they impact the price, their effect is much the same. So volume can act in the same way as support and resistance as price does. So when you approach these low volume regions on the VPOC histogram, then you expect price to move through there fairly quickly, either because you've got low volume, or the more, excuse me, the more semantic, esoteric description or explanation, I suppose, is that if the market didn't consider a level important in the past, why would it consider it important in the future? That's a more nuanced approach, if you like, but the outcome is the same. So what you're looking at with the VPOC is congestion levels, high volume levels, low volume levels, and if you've got a trade running, you know, this would have come up to it, low volume here probably at the time, straight through there fairly quickly. That's what you expect to see accompanied with volume, and then we run into this region, back down we go. Now we're back down into the volume point of control. It looks like we're going to rally up again. A lot of congestion. Yes, there are trades in there. The question is, you know, are they strong enough to take? Are they big enough moves for you to take? And that's only a question that you can answer. If I just change this over to Tesla, see if there's anything going on there. Tesla, just look at the daily chart here, and we write about Tesla. We're involved with Tesla. We trade Tesla, and when we were doing some analysis on it, going back to, we were in March here, and at the time it was really surging higher. And for various reasons on this time frame and other time frames as well, Anna did some analysis and suggested it was coming to a top, and it wasn't going to go much higher. And I have to say, the flurry of vitriol was pretty strong. But then our shoulders are broad, and we suggested that it was, it was going to go a little bit higher, but then it was going to reverse, and reverse quite strongly. And I think at the time, I think you said it was going down to about 700, not 750, something like that. As I say, there was a lot of vitriol at the time, but hey ho, there we are. Here we are, trading at, lo and behold, actually below that figure, 684 at the moment. A lot of congestion. Now, what's interesting about Tesla, obviously, it's a huge profile stock. It's massively traded. What we're seeing here is obviously congestion building. We've got the volume point of control. So the volume here is huge because we've been here for a long time. What's also interesting, we've got quite a strong level, a ceiling of resistance here on the accumulation distribution. That's been tested 5 times in the past. So that's pretty strong. There's a minor level below it, ×2. So there's a strong level of resistance overhead. The platform of potential support, which is not that strong, it's been tested 4 times. It's broken down below it today, and we've got another level down here. If we move down to this level here, then it really will open out into something a little bit more spectacular, potentially. Let's just have a look on the week. That's where we are on the week. Pretty much the same sort of technical picture. We're trading around the volume point of control. We've got this, let's move that out of the way, this hugely significant level here at just below 600 on the accumulation distribution. And if it breaks below that, gets down to 600 and breaks through there, then we're going to go down to something like 450, which is not what people want to hear, but that's what the technical picture is flagging at the moment. But only if it gets down to that level and goes through there, then it will be a really nice short, because you've got a huge floor of support in here with all these other levels tested over here way back. So this is now absolutely fundamental to the longer term perspective for Tesla. Intraday, it's the usual picture where you can trade it to the long side, trade it to the short side. Got a big surge in volume come in, we had a volatility trigger, went through there. Then on the next candle, what do we get? Even more volume than this one, but actually half the price action. So is this a trap move? You bet. It's gone up. Okay, now we've got a 2-bar reversal, rolls over. So you just interpret everything as it comes in. Yes, this is intraday trading, but that's what intraday trading is about. You've got to be quick. If you want to jump in there, if you want to jump in on the breakaway, fine. You're breaking through this level. You've got these levels here of resistance over here. We've gone through there. Yes, it's a volatility candle. Okay, on to the next one. You're out. You've got 2-bar, get out and just sit tight and wait for the next one to come along. The trend monitor transitions into trend upwards, and now we're in congestion. That's how quick it is. It's just either you enjoy doing that or you don't enjoy doing it. It's a personal thing. Just to pull over, this is what's going on in terms of the VIX. There you are. That's what I was saying. Just starting to break through this level here, develop a little bit of a trend to the downside, but it really is sliding. It's not moving with any great momentum. And bear in mind that we're still up in the high 20s, 28. So it's not as if we've suddenly gone from 28 down to 25, 24, whatever. There is still a lot of nervousness around. So it'll be interesting to see how we pan out on the end of the week. Just go back onto the indices. This is on a multiple time frame. This is on the NQ on September contract. So it's not great for an intraday trading perspective. Yes, there are trades there, but you've really got to go down. If you want to trade this, you've got to go down to these faster time frames. This is 15 second. It may or may not suit you. I trade this. It suits me, but it's not everybody's cup of tea. But the principles of VPA are exactly the same. It doesn't matter what time frame you're on, what chart you're on, what market you're on, what instrument it is. The principles apply in exactly the same way. We've come off the high there. We've come down to the volume point of control. What are we going to do? We're going to congest there. So if you're in a short here, you're not going to be holding this for too long because you've got this in the way. And that's always the way to analyze charts. You look at the chart, you don't look at it on a 2-for-1, 3-for-1 risk ratio, absolute load of nonsense. It's basically you look at the chart and you define your trades and whether you want to take one or not take one according to what the chart is telling you, what you've got in the way ahead in terms of support, resistance, levels, volume, on the VPOC, what have you got on price-based support and resistance, etc., and of course across the multiple timeframes as well. So there we go. Be interesting to see what happens tomorrow and into the back end of the week ahead of the 4th of July. If we don't talk to you before then, have a super holiday for those of you in the US. Where will you find all the bits and pieces? You'll find them here this is where you'll find all the indicators at quantumtrading.com. We have all the platforms, MT45, NinjaTrader 7.8, TradingView, which I've just been through with you, and also TradeStation has now been launched. We've got 2 versions of that. That's the TradeStation 9.5 with interactive brokers as the live feed, and TradeStation 10, which is TradeStation Securities, and they of course incorporate the awesome power of radar screen, which is wonderful. And remember, when you invest with us, there's several things to remember. First of all, you can move your indicators from platform to platform. So if you start with one platform, you perhaps want to move to another platform, that's perfectly fine. We don't charge you for that. We just transfer your indicators across. We have a lot of customers who start perhaps with MT4 or TradingView, then they want to move to TradeStation or NinjaTrader. Perfectly fine. We do that for you. Absolutely no charge at all. And finally, if you do, whether you buy one indicator or several, if you upgrade to another package, for example, we will always give you a credit for those indicators. So you never lose out. You never lose your initial investment. We always protect you in that respect. So you'll always receive a full credit. And finally, of course, if you invest in the full package, even more so with TradeStation at the moment, because it's currently at $677, I think off the top of my head. But once those other indicators are developed for the platform, then we will be increasing the price, which will align with the MT45 platform. So it's a great time to invest with TradingView because, as I say, you'll get all those indicators free of charge. You won't be paying for them. So it's not a bad time to invest in that package. But all the other packages, if you invest with the full package, we also give you all future indicators we develop free of charge. It's just our way of saying thank you. Finally, just to give you a heads up on the education program, I've just touched on one or two aspects of it. Obviously, within the program here, it's called the Complete Forex Trading Program because that's exactly what it is. To say it's comprehensive is a disservice. It is everything you need to know. You have all the modules which cover the psychology, the fundamental analysis, relational analysis, so you'll understand how markets relate to one another in terms of risk, in terms of relationships to bonds, bond yields, how commodities fit into that structure, and of course the actual relationships within markets, you know, how currency pairs relate within the markets themselves. You've got a deep dive into technical analysis, of course, that is VPA. It's all the Wyckofffian principles, it's Wyckoff's three laws. And in addition to that, it's how to apply VPA, not just to straightforward analysis, but we teach you how to understand when a trend is coming to a pause point and to identify whether it's actually a reversal in trend, in other words, from primary to primary, or is it simply a pullback? And if there's one thing that you would learn, it is simply that, because that will stop you getting out of trades too early. It's as simple as that. The mechanics of trading, and then there's something like 200 to 300 hours of video, VPA chart examples, how to use the indicators, pulling it all together, topic webinars with Anna and myself, a huge webinar library, and a resources section as well. And of course, all of that is backed up now. We've added the QTE funded Forex program. And the reason we've done it is very simple, because we wanted to give you, our students, and this is only available to students on the program. I'm sorry, it's not available to anyone else. If you're a student on the program, you have the option to join. It's there to give you the opportunity to leverage your knowledge. And it's very simple in the way it works. It's a no risk deal as far as you're concerned, because you are trading our money. It's as simple as that. We give you the opportunity to start with an evaluation account at $5,000, $10,000, or $15,000. Once you've achieved a very achievable target at that level, you've proved to yourself that you have the consistency to trade, you've proved to us you have the consistency to trade, we then multiply it by 4. So if you start with a $15,000 account, we push you up to 60,000, and thereafter we double it. So you go from 60 to 120 to 240, and in pretty much no time at all, you would be up trading $1 and $2 million accounts. It is simple as that. There is no risk to you. There's a one-off fee to pay. That's it. That's your only expense of getting into that particular program, but it's entirely optional. What we've now bolted together, we feel it gives the complete package, if you like, of giving you the opportunity as a student to benefit from your knowledge and prove to yourself that you can trade a large money account at no risk. So that's it. Hope you've enjoyed this particular video. Lots more to come as always. Thanks for watching. See you again soon, and bye for now. Where will you find all the bits and pieces? You'll find them here this is where you'll find all the indicators at quantumtrading.com. We have all the platforms, MT45, NinjaTrader 7.8, TradingView, which I've just been through with you, and also TradeStation has now been launched. We've got 2 versions of that. That's the TradeStation 9.5 with interactive brokers as the live feed, and TradeStation 10, which is TradeStation Securities, and they of course incorporate the awesome power of radar screen, which is wonderful. And remember, when you invest with us, there's several things to remember. First of all, you can move your indicators from platform to platform. So if you start with one platform, you perhaps want to move to another platform, that's perfectly fine. We don't charge you for that. We just transfer your indicators across. We have a lot of customers who start perhaps with MT4 or TradingView, then they want to move to TradeStation or NinjaTrader. Perfectly fine. We do that for you. Absolutely no charge at all. And finally, if you do, whether you buy one indicator or several, if you upgrade to another package, for example, we will always give you a credit for those indicators. So you never lose out. You never lose your initial investment. We always protect you in that respect. So you'll always receive a full credit. And finally, of course, if you invest in the full package, even more so with TradeStation at the moment, because it's currently at $677, I think off the top of my head. But once those other indicators are developed for the platform, then we will be increasing the price, which will align with the MT45 platform. So it's a great time to invest with TradingView because, as I say, you'll get all those indicators free of charge. You won't be paying for them. So it's not a bad time to invest in that package. But all the other packages, if you invest with the full package, we also give you all future indicators we develop free of charge. It's just our way of saying thank you. Finally, just to give you a heads up on the education program, I've just touched on one or two aspects of it. Obviously, within the program here, it's called the Complete Forex Trading Program because that's exactly what it is. To say it's comprehensive is a disservice. It is everything you need to know. You have all the modules which cover the psychology, the fundamental analysis, relational analysis, so you'll understand how markets relate to one another in terms of risk, in terms of relationships to bonds, bond yields, how commodities fit into that structure, and of course the actual relationships within markets, you know, how currency pairs relate within the markets themselves. You've got a deep dive into technical analysis, of course, that is VPA. It's all the Wyckofffian principles, it's Wyckoff's three laws. And in addition to that, it's how to apply VPA, not just to straightforward analysis, but we teach you how to understand when a trend is coming to a pause point and to identify whether it's actually a reversal in trend, in other words, from primary to primary, or is it simply a pullback? And if there's one thing that you would learn, it is simply that, because that will stop you getting out of trades too early. It's as simple as that. The mechanics of trading, and then there's something like 200 to 300 hours of video, VPA chart examples, how to use the indicators, pulling it all together, topic webinars with Anna and myself, a huge webinar library, and a resources section as well. And of course, all of that is backed up now. We've added the QTE funded Forex program. And the reason we've done it is very simple, because we wanted to give you, our students, and this is only available to students on the program. I'm sorry, it's not available to anyone else. If you're a student on the program, you have the option to join. It's there to give you the opportunity to leverage your knowledge And it's very simple in the way it works. It's a no risk deal as far as you're concerned, because you are trading our money. It's as simple as that. We give you the opportunity to start with an evaluation account at $5,000, $10,000, or $15,000. Once you've achieved a very achievable target at that level, you've proved to yourself that you have the consistency to trade. You've proved to us you have the consistency to trade. We then multiply it by 4. So if you start with a $15,000 account, we push you up to 60,000, and thereafter we double it. So you go from 60 to 120 to 240, and in pretty much no time at all, you would be up trading $1 and $2 million accounts. It is simple as that. There is no risk to you. There's a one-off fee to pay. That's it. That's your only expense of getting into that particular program, but it's entirely optional. What we've now bolted together, we feel it gives the complete package, if you like, of giving you the opportunity as a student to benefit from your knowledge and prove to yourself that you can trade a large money account at no risk. So that's it. Hope you've enjoyed this particular video. Lots more to come as always. Thanks for watching. See you again soon, and bye for now.